Was there just a lag, or did you make some
No, I made a
improvement?
configuration change,
Got it.
so it should be going live again in a second.
Cool.
Okay, looks like we're live. All right, sorry about the technical difficulties there, guys. We'll give it another minute or two for folks on Twitter to join up. I got a bunch of windows open here that I need to close out. I need to silence my phone. All right.
44, 50 trainees,
All right, good. They're
45 trainees,
trickling in.
45 trainees.
All right, so got too many browser windows here open on my other screen, so I'm trying to get everything situated here. All right. How many we got on Twitter now?
Showing 89 viewers on Twitter.
113.
Okay.
Oh, yeah. Yeah, 89.
All right. Let's go full screen over here. All right. GMet, good morning, everybody. Good morning, everybody on the Zoom here. Good morning, everybody in Twitter space, X space, whatever you want to call it. We're starting off now our LP Army Bootcamp. This is our fourth bootcamp installment. Joined here by our great instructor support team here. We've got Otto, Ryan, Rizop, Hugo. So they're going to be answering questions that you guys may have for those of you that are attending in the Zoom session live. I asked that when you ask questions, please use the Zoom feature for asking questions. So today's just the beginning, right? So we're just getting started here. We of course will have day two that Otto's going to be going through with you guys, and he'll be covering more advanced topics tomorrow in tomorrow's session. So a few prerequisites. Obviously, you need to agree to terms and conditions. Little disclaimer here. I thought we had this in the prior slide. I don't know why we got this reversed. So I am not a financial professional. Nobody else on the instructor team is a financial professional. So anything you do today, going forward, you do at your own risk. You won't hold us liable. You won't blame us if you lose money. Potentially you will lose some money, but that's part of the learning process. So if you guys don't agree with this, please do not continue. Leave the session now. Close your Twitter browser window if you're watching on Twitter, and don't participate. So you guys will need a Web3 wallet app or browser extension that supports Solana. Make sure you have it funded with around 0.6 Sol, which would be about 100 USD today. And be prepared to lose before you win. So what we're going to be doing today is really teaching you guys the rules of the game, right? If you consider market making or liquidity providing a game, it's important that you know the rules of the game before you can even play the game. But to figure out how to win the game, that's really going to take time. It's going to take time and practice. And, just like when you're learning to play chess, checkers, any other game that involves strategy, you're going to probably lose for a while before you learn how to win. And, providing liquidity, becoming a market maker is really no different. and you really need to practice, you need to learn from it, and you're gonna probably lose before you win, so be prepared for that. All right, so my name's George Sierra, aka Geek Lad. You'll see me as Geek Lad on Twitter as well as in the Meteora Discord. I've always been a techno geek all my life, early adopter. I've been working professionally about 25 years, doing a lot of technical, a lot of stuff in data analysis. I've worked in Six Sigma doing process improvement. I've worked as a finance manager, worked in operations, business development. So I've done a lot of different things throughout my career at Johnson Controls, and that's my current employer. So, I've had a number of side hustles. Last year and early this year, I actually taught a fintech boot camp. So, I'm no stranger to teaching boot camps, and it's part of the reason why I wanted to get involved with teaching this boot camp. I am a member of a small startup. We do a bunch of little things. We recently launched a meme token. Not the most successful launch, but we're moving forward with it. See what we can do to continue to promote it. Definitely learning a lot from it. I also created an arbitrage bot shortly after the Jupyter SDK was released. And that was part of the, basically the main source of my Jupyter airdrop. We did quite a bit of volume with that arbitrage bot. Aspiring to launch a career in crypto here, an encore career, right? So I'll be 50 next year, and already looking forward to retirement. See if we can do an early retirement and do a second career in crypto. That's kind of my ambition right now. We'll see if it happens or not. My experience in crypto started, I guess, in earnest back in 2017. Bought some video cards, started doing mining on Ethereum, and then just started playing with a lot of different contracts on Ethereum, like Uniswap, 1inch, DYDX, and I got some airdrops on those different platforms. Took those airdrops, started using that to play more with DeFi on Ethereum. And then when Ethereum got really expensive, and it got expensive to transact on Ethereum, that's kind of when I made the move over to Solana. And kind of been on Solana since then. I mean, there's a lot of great DeFi products on Solana, a lot of cool stuff out there. And I encourage you guys to look at all the stuff in the Solana ecosystem, not just Meteora. There's a lot of cool stuff out there. All right, so as I said earlier, those of you that are attending via the Zoom, please ask questions using the Q&A feature. The chat can get a little crazy as people are chatting, and so please use the Q&A feature as you have questions, and please ask questions. We've got the staff here to answer your questions, and I'll answer questions live as they come up as well. I want you guys to follow along with what I'm doing. So, it's really important that you get your hands dirty, right? You actually take action and do these things. It's one thing to watch somebody do something. It's something else entirely to actually do it to yourself and watch it and watch things happening and really observing what's going on as you're performing these transactions. And then after the boot camp, you guys can follow up in the Discord. We're always in the Discord. There's a lot of helpful folks in the Discord. It's a great place to be. If you guys don't have Discord, highly recommend you download it, set up an account, and join the Discord. It would be really cool. And we can chat with you guys there, answer questions that you may have. All right, so by the end of the day, you'll be able to provide liquidity in a dynamic pool, and we'll talk about what dynamic pools are. Deposit into a stable DLMM pool. We'll also talk about what DLMM pools are, and then deposit into a volatile DLMM pool. So, it's important that you guys learn all the key terms, right? So we're going to go through a lot of terminology today, and it's important you learn what these definitions are, and how they interact with each other, and that way when you can ask questions and you can use the correct terminology and kind of get a really good understanding how everything works. So overview on today's agenda. So we're going to talk about liquidity, market making on the blockchain, LPing on Meteora, and then we're going to actually go through some hands-on exercises. And then if we've got any time afterwards, we'll do some Q&A. We may end up going a little bit over in today's session. We had a little bit of, we had some technical difficulties starting here, so we may end up going a little bit over. All right, so let's talk about some fundamental terms, and let's talk about liquidity and market making, not on the blockchain. Let's just talk about what these terms mean in traditional finance. So liquidity is a liquid asset, right? So a liquid asset, can be something that's easily, freely exchanged for cash. So cash itself, fiat currency, right? Dollar bills, euro bills, Japanese yen, that's all fiat currency, and that's liquid. That's a liquid asset, right? You can freely exchange. If you're in Japan, you can freely exchange yen for food, for whatever it is you need to buy. If you're in Europe, you can freely exchange euros to purchase whatever it is you need there. If you want to buy a meal, you want to buy clothes, you can exchange your euros there. In the US here, we've got the dollar. Use it to buy everything. So those fiat currencies, as they're called, are liquid assets. And other examples of liquid assets might be stocks, bonds, commodities, right? So these things are very liquid because there's exchanges where you can freely trade from whatever fiat currency you have to whatever that other asset is, or you can sell that asset back to get the fiat currency. Cryptocurrency is also considered a liquid asset. You've got centralized exchanges where you can easily exchange from fiat back to crypto, crypto back to fiat. And then, of course, we have decentralized exchanges that have all of these liquid assets as well. So a market maker, in TradFi, market makers is a firm or an individual they're actively both buying and selling an asset at the same time. So they're actually providing bids and offers, right? So in traditional electronic markets, you have an order book where you have a lot of bids, and the bids are people that want to buy the asset, so they place these bid orders. And then you have offers, and these are people who own the asset that's being traded in that particular market, and they want to sell that asset, so they have an asking price for it. So what market makers do is that they're on both sides. So they both have bids and they have asks at the same time. And basically the way they make their money is the spread, right? So there's a difference between the bid and the ask, and whatever difference there is in that bid and ask spread, that's where their profit is made. So it's very slim margins because that spread tends to be very, very small. Like on stock markets, bond markets, commodity exchanges, all of these different electronic markets have these order books where we have bids and asks. And these market makers are performing high frequency transactions in those markets, right? So you may have heard that term, high frequency trading. And they have automated systems that are very sophisticated and can be performing thousands, tens of thousands, hundreds of thousands of transactions a second, and buying and selling, right? So very, very slim margins, very, very high volume. So they're moving billions and billions of dollars a day, right? And market makers typically have very, very high amounts of money, very large sums of money, as well as assets, typically billions worth. And so there's very large barriers of entry to becoming a market maker in TradFi. And there's an Investopedia definition. And I encourage you guys to research these things and learn more about market making in TradFi. It's a really interesting topic. And then there's a question in the chat here: how do market makers decide when to buy or sell. So basically, they decide right when they become a market maker that they are going to buy and they're going to sell. So they're doing them both exactly at the same time, and they have very sophisticated systems that can react, at a microsecond level, and are making all of these trades, and they're doing the trades on both sides. All right, so market making on the blockchain. So let's talk about AMMs and LPs. So AMM is an automatic market maker, and that's really how most of the market making happens on DeFi and then blockchain. And these are basically blockchain programs that allow people to put their assets into a pool, right? So liquidity pool is where these assets go into. So for example, if we're on Meteora and we're in a Solana USDC pool, you're going to provide USDC, and then you're going to provide Solana as well. And you're going to put both of those assets into a pool. And then when people are swapping those assets back and forth, they're swapping it through the pool. So the mix of those assets in the pool is going to change according to, how those swaps are taking place. LP is another term you'll hear in market making on blockchain. It can stand for a couple of different things. It really depends on the context. So a lot of times you'll hear people talk about LPs as a liquidity provider. So that's someone who is a market maker on an AMM platform or an AMM pool or an AMM market. Could also stand for liquidity pool, which is the pool itself where all those assets reside. And then it can also be used as a verb, right? So LPing, LPING, really just means providing liquidity within a pool. And we got another question here. I'll see if I can answer this live. So the question is, what exactly is the market maker doing to make money in traditional markets? If the seller is always selling for more than someone is willing to buy it for, are they arbitraging on market orders? So essentially, it's all about, really, regardless of the price movement, on average, they're going to be making a profit. So let's say you have an asset that's trading for $100 USD. And so on the bid side, people are going to be, they want to buy it for $99, right? And then on the ask side, people are going to be selling it for $101, right? So a market maker is going to be placing both orders. They're going to have orders to sell it for 101. They're going to have orders to buy it for 99. And then so what happens is Rizop wants to buy it, right? So in order to buy it, he's going to have to pay the 101. So he buys one of that asset for 101. All right. So now the market maker has received that $101, right? Otto has the asset and he wants to sell it, and there's that order out there for 99 to buy it. So Otto sells it, the market maker then buys it for the 99, and now in total the market maker has made a profit of $2, right? Because it's 101 on one side and then 99 on the other. Spread is $2, so they made a $2 profit. And that's kind of a very atomic example, right? Just like two trades, right? But imagine this is happening very, very fast, right? And the price is actually moving up and it's moving down. So even if the price moves down, say it moves down to 99, they're still going to have that $2 spread. So now they're going to be at 100 and then they're going to be at 98. And they're going to be fulfilling orders there. They're going to make that $2 spread on orders that happen at that price. So even if the price moves down and the price moves up, as long as on average the price is still hanging out at around $100 and there's enough volume, right? So they can make enough trades and make that $2 spread enough times to cover any losses they may have because of a drop in price, then they're still going to be profitable. So that's basically how market making in TradFi works. And on blockchain is very, very similar, except you don't have an order book in these automatic market making pools. And we'll talk about that a little bit later. One important thing I want you guys to do when you're doing market making is really you have to treat it like a business, right? So liquidity providing is not staking, it's not trading. And like I was just explaining to you now, in TradFi and market making, it's a very high volume, very low margin business, right? So, the example I was giving before with a $100 asset with a $2 spread, that's a 2% margin. And that's actually very, very high when it comes to market making. Usually market making, you're dealing with, fractions of a percent or basis points, right? So you may be in a market where you're providing liquidity and your margin or your spread is actually much, much smaller, like 0.01%, right? In blockchain, 0.01%. A lot of markets have that kind of fee. And so basically very, very slim margin. But if you have enough swaps going through it, enough volume, then you're going to make profit. So what you really want to do is treat your assets like inventory, right? And you earn profit by turning that inventory over very, very quickly, very, very frequently. So you want to make sure you're in a market that has high demand, where a lot of people are buying and selling it, right? Because that's going to ensure that you have enough volume to make sure that you can achieve profitability. And I like this last bullet here where I say you don't want to hold assets any more than Home Depot wants to hold lawnmowers, or a grocery store wants to hold produce. And I really like the produce example because, for example, like meme coins, right? So meme coins, they tend to have a lot of volume very early, and the price action, the price tends to go up, and it goes up very, very quickly, but then it can also come down very, very quickly, right? Sometimes it does tend to continue to go up, but usually goes up less slowly, and then volume drops off. But in the case where a meme coin price is going up and then coming back down quickly, but there's a lot of volume while it's going up, you can make money there LPing on the volume. And you want to make sure, it's an asset. You want to treat it like an inventory asset. And you want to sell it before it spoils, right? So you want to make sure you're making money on that volume while it's going up, and then you can make money also as it's coming down, as long as the volume's still high. But it will get to a point where volume starts to drop off. People aren't selling or buying it anymore. And then when it gets to that point, you're not going to be profitable anymore. So, that would be equivalent to like a grocer holding on to produce too long. They're selling tomatoes. They hold on to those tomatoes too long. Those tomatoes rot, and now they have a worthless inventory asset, and they have to throw it away. So the equivalent to that in a meme coin is that the meme coin price has really dropped down, and the volume has dropped off. That's really the important part. The volume has dropped off. Nobody's buying it anymore. So now you end up having to give it away, and you're no longer profitable in that market making activity. And someone's asking here, what happens when one of the assets loses, say, 90% of its value? And that's a good question. And of course, like anything, a lot of times the answer is, well, it depends, right? So it depends. If it dropped down to 90% value, and that drop happened very, very quickly, and you weren't performing market making very long during that period where it dropped to 90%, most likely you're going to lose, and you're going to lose pretty badly. Now, if something drops down 90% and that it takes 2-3 years for it to drop 90%, well, you may still be profitable, because if there's enough volume, there's a lot of volume happening while the price is dropping down, you can be profitable with that. So it really depends on how fast the price drop happens. If it's gradual, it's happening over time, and there's a lot of volume happening while the price is going down, you can still be profitable. All right, so TradFi versus DeFi market. So as I said earlier, TradFi, they tend to use these bid-ask order books. And with automatic market makers, they use these liquidity pools. So in the bid-ask order books, the profit is made between the difference in the bid and ask, right? The spread. With automatic market makers, it actually happens with fees. So what happens is when someone swaps into a pool, that pool has a fee or a base fee associated with it. And that base fee may be 10 basis points, right? Or 0.1%. So what happens is when they swap into it, they're putting one asset into the pool and then they're taking the other asset out of the pool. And when they put that asset into the pool, a fee is charged on that asset. And so they're going to get out a little bit less than what they would have if there was no fee or if there was a lower fee in that pool. So the pool charges that fee, and the market makers are making money on that fee. So that's how fees are earned and how market makers make their money in the AMMs versus order books in TradFi. But blockchain also has order books. So there are example of some order books on Solana here, like Phoenix, Open Book, and these actually work exactly the same as TradFi bid-ask order books. And basically they work a lot like the SEXs too, right? Like the centralized exchanges, which also have bid-ask order books. So there are protocols on Solana that do that as well, like Phoenix and Open Book. All right, so this is a hot topic, impermanent or divergence loss. So, and this is a very, very important concept for everybody to learn when you're providing liquidity in an AMM. So you're putting both of these assets in. Let's go back to the USDC Solana example. You're going to put in USDC and you're going to put in Solana, right? And when you put those two assets into the pool is going to have a price at that point in time, right? So those assets are going to have some price relative to each other. So let's say Solana's trading at 170, right? So you put in your USDC, you put in your Solana, and then the price is changing all of the time, very, very quickly, right? If it's a very active pool. So what happens is, as the price of Solana goes up, you're going to end up with less Solana, right? Because people are buying that Solana is coming out of the pool. So your Solana in your position, the amount of Solana you have is going to go down. And then what's going to happen is people are putting USDC into the pool. So your share of USDC is going to go up, right? And the price goes down, then people are selling Solana. So that means they're putting Solana into the pool. So there's going to be more Solana coming in and there's going to be USDC coming out, right? And so this is happening all of the time, right? And in a two-sided position, the likelihood of you getting the exact same amount is extremely, extremely slim. And this impermanent divergence loss, it doesn't happen only when you close the position. If you pull all your liquidity out, it's happening as soon as you open that position. So it's a constant process, right? Price is going up, SOL comes out, USDC goes in. Price goes down, the opposite happens, right? Now what's happening is this is happening because trades are happening, swaps are happening through this pool, and all the while, every time that swap happens, Solana price goes up, Solana comes out, USDC comes in. There's fees that are being charged, right? So you're going to accumulate those fees depending on your share of the pool. And that's how you end up being profitable, right? Because if there's enough volume, every time those swaps happen, maybe one basis point, 0.01% is charged. And if there's enough volume happening, then that, even though the price of Solana goes up, or let's say it goes down, right? So there's more Solana in the pool, price goes down, so your overall value in USD of your position has gone down. However, you've also earned fees all that time, right? And as long as you've earned more fees than that impermanent or divergence loss, you're going to be profitable. So that's kind of the whole idea. That's how the whole game works. You want to make sure that you've earned enough fees to overcome that divergence loss. So here's an example of divergence loss, right? So we started at a price of 170 USDC per SOL. We had about 0.25 SOL and 40 USDC in the position, right? And then after a little while, we earned some fees and the price changed, right? So USDC, the price actually went up a little bit, USDC Sol. And so our divergence loss was that we lost about point oh four, no, 0.06 Sol, but we gained also 9 USDC. So you can see that's what happened to the position. That's kind of how things shifted a bit based on the price. So the net change in the total value, including fees, was about 30 cents in USDC. So divergence loss, we lost about we lost some Sol, but we gained some USDC. But the total position was profitable because of the shift in the asset value was favorable, right? If your basis or is in USDC, but we also gained we also earned some fees as well in the position. All right, so let's talk about CLMM. So CLMM is a concentrated liquidity market maker. So when these AMMs first came out, basically they created this liquidity pool, and then the price was based on the total assets and the total mix of those assets. And traditional AMMs, they're very capital inefficient because only a small amount of the capital is being used at any given point in time. And we've got a visual on the next slide that better explains what this is. CLMMs are a lot more capital efficient because you're deciding, okay, at what price am I going to provide the liquidity? And so it allows liquidity providers to earn more fees. And it also allows traders to experience lower price impact. And we'll talk about what price impact is in a minute. All right, so here's that nice little visual I was talking about. So on the left here, we have standard AMM. And with a standard AMM, you have a flat range from 0 to infinity where you're providing liquidity. And so the price action is all happening between, say, $30 and $35, whatever this asset is, right? So all of your price action is happening right in here. And then another price action is happening over here. So you have all this liquidity out here that's just not being used. It's not capital efficient. And then with concentrated liquidity market making, you're deciding, or the market makers are deciding in what price range, excuse me, in what price range they're going to provide liquidity. So because the price action is happening primarily between 30 and 35, they've decided, okay, I'm going to provide my liquidity mostly between 30 and 35. So you can see there's less liquidity between 0 and 30 and less liquidity above 35, and most of the liquidity is happening in here. And so your market makers are going to earn better fees, and then the traders who are swapping through the pool, they're going to experience less price impact. So let's talk about what price impact is, as well as slippage. So we'll talk about slippage first. So slippage basically means what happens on Solana is there's a lot of transactions happening, right? There's thousands happening per second, and there's a lot of validators that are validating these transactions, and it does take time for the transaction to be received by the validator and then processed by the validator. So when you submit a transaction, by the time you click that button to submit that transaction, the price may have shifted underneath you, right? So by the time the validator receives a transaction and is processing it, there was already a lot of transactions ahead of you, right? And in that split second. And so the validator is looking at what those were, and the price may have changed. So by the time that the validator gets to your transaction. So that is referred to as slippage, is that price difference that there is from the moment that you click that button to the moment that it actually gets processed by the blockchain. So if you guys have swapped through Jupiter, you'll see that there's a slippage setting, and that's what that is. So if you set your slippage to, say, 0.1%, what happens is if the price is moved more than 0.1% in an unfavorable fashion, that transaction is going to fail, And it may sound like a bad thing, but it's actually a good thing because that's a protection against you. That's a protection for you to make sure that you actually get the price that you wanted, right? So if you wanted to swap something for 100 and the price went down to 99, but you only have a 0.1% slippage, then that transaction is going to fail. Because otherwise, without that slippage, you would end up only getting 99, right, if you were selling it. But you wanted to get 100 or 100 minus 0.1%, right? So whatever that comes out to be, I'm not going to try to do math in my head, but so that's slippage. Price impact is the effect that swaps have on the depth in the market. And what depth means is how much liquidity there is in that pool, right? So say, we're back in a USDC Solana pool, and say we have $1 million worth of liquidity within a very tight range. So what happens if you're swapping $10, that's going to have essentially almost no price impact on that market, right? Because there's lots and lots of liquidity relative to your swap. So because what happens is as the assets change, that's going to change the price, right? So now let's say in that same pool, you swapped $500,000 USDC worth, and it only has $1 million of liquidity. That's going to have a huge price impact because you're going to take out half. Let's say you're buying Solana, you're going to take out half of the Solana and you're going to put in, almost double the amount of USDC. So that's going to cause the price to skyrocket, right? Because you're pulling out a ton of Solana from that pool and you're putting in a ton of USDC. So that is price impact. So slippage and price impact, two very important terms to learn. TVL. So TVL stands for total value locked, and that's like the US. Typically, things are denominated in US dollars when we're talking about total value locked, and it could be within any sort of context. So, like for example, you could be looking at all of Meteora DLMMs, right? And you want to know what's the total value locked in all of Meteora DLMMs, and it could be on the order of hundreds of millions of US dollars. Or you could be looking at a very specific pool or one market, one DLMM market within Meteora, and maybe the total value locked there is only 100,000, right? Or if it's a really, really small pool, it might be only a few thousand or even only a few hundred. So total value locked is the amount of liquidity there is in any particular pool, blockchain, protocol, whatever it is that you're talking about. So measuring pool yield, this can be very tricky. So when you're on Meteora and you're looking at different pools, you'll see a 24-hour fee over total value locked. So what this is, it's a calculation of the total fees that have been generated by a particular pool within the past 24 hours divided by the current total value locked within that pool. Okay, so it's tricky because this can end up with this value really being overstated or understated. So what happens if it's overstated? So maybe the 24-hour fee over TVL, it's saying that you have, 3% 24-hour fee over TVL. Wow, that sounds really great. Well, yeah, but the reason is because a whale recently exited the pool. So the denominator, the total value locked, is a lot smaller than it was in the past 24 hours when all those fees were generated. So that's how you end up with an overstated pool yield. Understated pool yield is the opposite, right? So that's when whales have recently come into the pool, right? So maybe, there wasn't a lot of liquidity in a pool and, maybe it was generating like 2% fees. And then all of a sudden a whale got into that pool and now the denominator is huge compared to what it was when those fees were generated. And now it says there's a 24-hour fee over TVL of 0.01%. And that sounds like this isn't a very good pool because there's not a good 24-hour fee per TVL. Well, no, it's just because a whale just recently came into the pool. So, you do have to be careful with looking at that and putting too much faith in that 24-hour fee over TVL. You have to look at a lot of other metrics and measurements and charts to really get a good understanding what kind of fees a pool might be generated. Really, the most important thing is volume, right? You want to see a lot of volume happening relative to the amount of capital that's in that pool.
Hey George, sorry to interrupt, but
Yeah,
do you mind going into detail on how your DLMM bot is producing the 24-hour fee? Um, so like the fee that it spits out, that it's giving you kind of some ideas or starting points to kind of look at like your like pool parameters. Is yours just filtering on this 24-hour fee? Like, are we going to be kind of exposed to getting overstated or understated?
yeah, that's a great question, Rizab, and I'm glad you brought that up. So basically, what the bot does, and I have created a bot that we have on the Meteora Discord that people can use to see potential opportunities for market making, and and there's a tool also called Deck Screener, and Deck Screener they track what the volume has been over a few different periods of time for a particular asset. So they'll track over the last 5 minutes what the volume was. I believe over the last hour what the volume was, over the last 6 hours what the volume was, and over the last 24 hours what the volume was. So the nice thing about that is you kind of get a feel for, all right, how much volume is taking place at all those different time frames. And then what the bot does is it'll project what the 24-hour volume would have been based on what's happened during that time period, right? So, for example, in the past hour, you had a certain amount of volume, and then the bot will project what that volume would have been over 24 hours by multiplying it by 24, right? And then for the 6 hour time frame, it calculates what the volume would have been, and it'll multiply it by 4. For the 5 minute time frame, multiplies by 288. So now we've got a few different measures of 24-hour of what the volume has been over the past 24 hours, or what it would projected to be. And then the bot then estimates the fees based on those 24-hour projections. So it kind of gives you an idea, because for each one of those time frames, it could be overstated, could be understated based on the current TVL. So the nice thing is that we can kind of take a look at, all right, what's the minimum, right? So what's the least amount of 24-hour fee over TVL that's projected, right? So that would give us sort of the most conservative estimate. And then if you look at the max, it could give you kind of potentially an overstated estimate, or maybe it's accurate too, right? If the volume is all of a sudden going up in the last 5 minutes or the last hour, then it actually could be accurate if you're looking at the max. So the bot, you can look at either the min or the max. By default, it does the min because that's going to give you the most conservative estimate. So that's a great point, Rizab. I'm glad you brought that up. And Otto is going to show you guys a spreadsheet, which is basically what the bot is based on. And you guys will take a look at that tomorrow when he gets into doing some degen market making with you guys. All right.
Are we gonna trade some mother tomorrow?
Maybe. Let's see what's happening with it. All right. So far what we've talked about has been more in general market making in TradFi and on blockchain with concentrated liquidity market making. Let's talk specifically about LPing on Meteora. And so actually, before we get into this, I'm going to address a question. And somebody asked, can this be updated in close to real time? It's a good question. I actually have a Dune dashboard that sort of helps with that. And what the Dune dashboard does, it gives you a time series look at what the total value, what the estimated fees over total value has been hour by hour over the past 24 hours. And Otto, maybe we can add that to your deck as well, because I know we've got a bunch of different tools we're going to show in tomorrow's session. Maybe we can show that Dune dashboard. I think it'll be cool for people to look at. But yeah, so that's a good question about, can this be updated in real time? It's not really real time, but it gives you sort of a time series view of what the fee over total value locked has been and how it's been trending in a 24-hour period. All right, so Meteora 10% stimulus. So you guys may or may not have heard about this. So right now there's Meteor is going to be launching a token in the near future. Don't ask me when. I don't know. Nobody knows. Nobody here knows when, but it will be happening. So right now, if you're performing activities on Meteora, you can actually earn points towards getting the MET token or the Meteora token. So right now, whatever liquidity you provide on Meteora, you're going to get 1 point per $1 per total value locked per day. But the big points are going to be where you earn fees. So for each dollar of fees you earn, you're going to get 1,000 points. And it is important to note that vaults do not receive points. So you'll need to be market making in dynamic pools or DLMMs or the multi-token pools. And I'll show you what all these things are here in just a moment. Okay. And we don't know yet how many points are going to translate to how many MET tokens. Of course, that's going to be at a later date. So, and don't ask me when. I have no idea. Don't ask me how much. I have no idea. But the bottom line is, the more points you earn, the more MET tokens you're going to receive. And somebody's asking how to check out their point progress. That's a good question. So someone in the community actually built a really great tool that will calculate all of your fees earned. So you guys, it's Alex's tool, and Otto, I think we do have that in your presentation tomorrow, so we can definitely, you guys will see what that is tomorrow. He's got a lot of cool features on that tool. And then another question about will the MET airdrop be recurring? Are there going to be multiple drops? I'm not sure. That's a good question. I don't think we really know at this point in time, but we do know that there will be an initial airdrop. All right, so definition of a DLMM. So DLMM is a dynamic liquidity market maker, and it's a concentrated liquidity market making protocol based on Trader Joe's liquidity book. So Trader Joe's liquidity book is another protocol on Ethereum or Ethereum virtual machine blockchains. So Trader Joe's, it's based on Trader Joe's, but it's on Solana. So it's got all the same features as a regular concentrated liquidity market maker, but it's got some really nice additional features. For one, you're going to have zero slippage or price impact within a bin. So if you see the picture here, this is our liquidity position, right? So we've got, we're in a USDT, USDC pool, and you can see there's a distribution here at the top. So this is our position, and the liquidity is separated into these bins, right? So we have these bins here on the right that are denominated in USDC, these bins on the left that are denominated in USDT. And this particular position, it's more concentrated in the center. So this is what they call what do they call this one, guys? Not
This
the
is the
bid ask.
curve.
Curve, thank you.
This is the curve. Yeah, it's linear now.
Yeah,
They changed the math on it.
yeah. So it doesn't look like a curve, it looks more like a triangle. But yeah, it's called the curve strategy. So, and that's another cool thing about DLMM. There's a lot of different strategies you can implement. And so in this particular case, we have a curve strategy, and our liquidity is more concentrated in the center bins, right? So we've got a middle bin here at a price of 1.0001 USDT per USDC. And then from left to right, the price moves up, right? So you can see the leftmost bin here is going to be somewhere below 0.997 USDC per USDT. Our rightmost bin has a price of 1.0033. So these are different prices, right? Prices moving up from left to right. And in each bin is how much liquidity you're providing at that specific price. So the cool thing about DLMM is if there's a lot of liquidity in this center bin and you're swapping less than the total amount of liquidity in that bin, you're going to have zero slippage and zero price impact. So if you want a price of 1.0001, that's the price you're going to get if you're not going to exceed the amount of liquidity in that bin. Now, say you want to, let's see, you want to buy USDC using USDT, but you're going to end up buying more than the liquidity that there is here, then you're going to have some price impact, and you're going to have so the price you pay is going to be a little bit higher because you're going to get most of your liquidity from this bin and maybe a little bit more liquidity from the next bin, right? So in that case, there would be some price impact, but it helps to minimize your price impact the way that the DLMM is designed. Couple of more features. So it really makes it easy to do one-sided liquidity deployments. So like say you don't have any USDT, all you have is USDC. Well, that's okay. DLMM makes it very easy for you to only put in USDC. So that's another really cool feature with the DLMMs. Another amazing feature is dynamic fees. So what happens is if there's a lot of volatility, meaning the price, there's a lot of price action happening, making big moves in the price, the base fee is going to have a dynamic fee added to it. So you're actually going to earn more in fees when the price is moving very fast. So it's actually kind of a way to compensate market makers in very volatile markets. It's a great, great feature. And then of course we have the flexible strategies. We talked about the curve, which we have demonstrated here in this slide. And then we also have a bid-ask strategy. And then there's also the spot strategy. And we'll demonstrate that when we get to the demo here in a minute. All right, so there's a couple of different pool parameters in each pool. And so we got a little screenshot here of the app. You can see we have a bin step. So remember we were talking about the bins. Each bin has a specific price. And the bin step is the number of basis points. So 100 basis points is equal to 1%. So in this case, we're looking at a pool that has a 16 bin step. So that's 16 basis points or 0.16%. So the price from one bin to the next bin is going to be a difference of 0.16%. So you move from let's see, I got to do this opposite. You guys are seeing me opposite. From left to right, that's going to be an increase of 0.16%. And then from right to left, that's going to be a decrease of 0.16%. And then we have a base fee of 1 basis point, right? 0.01%. And that's how much people who are swapping through the pool are going to pay in their fees, and how much you're going to be earning if you're market making or providing liquidity in this particular pool. And then there's a max fee. And down below, you can see the dynamic fee. So the dynamic fee is down here. And you can see the dynamic fee right now is slightly higher than the base fee. So that means that there's been some price action that's caused some volatility in that pool. So whoever's providing liquidity in that pool is actually earning a little bit more than what the base fee is, right? So this is inclusive, right? This dynamic fee is what the total fee is at any given point in time. So it already has the dynamic fee added on top of the base fee. This is not additive to the 0.01%, right? So it wouldn't be 0.02 something percent. It's actually just a little bit more than 0.01% that you would be earning. And then right now there's no protocol fee. At some point in the future, there may be or may not be a protocol fee. That's still under discussion with the Meteora team and with the community. And then 24-hour fee is the amount of fees that were generated in the past 24 hours. Okay, so that's all of our pool parameters in the DLMM. All right, so let's talk about the different costs that are involved in opening a position in a DLMM. So there's a few different costs. There's a position rent, and the nice thing is in the UI, if you expand the there's a little section down at the bottom. If you expand that, you'll see all of this detail kind of laid out for you. And the position rent is this first one up here at the top. And you can see here it indicates that that's refundable. And it is refundable, and all of the fees, everything is paid in Solana. So you can see there's a cost of about 0.056 Solana in refundable rent. And if you're providing liquidity in a range that no one has provided liquidity before, you may have to pay for new bin arrays, and that is non-refundable. So you can see here, we're looking at providing liquidity in a range where we've provided liquidity before. So there is no bin array cost. So there's no cost for the bins here. And then of course, anytime you're transacting on Solana, there's always a transaction fee, and that transaction fee is usually pretty minimal. Of course, if there's a lot of congestion on the network, you may have to pay priority fees, which can drive up that transaction fee a bit. Okay. All
Hey
right.
George.
Yeah.
Hey George, sorry to interrupt you, but do you mind addressing this question?
Uh-huh.
Does the dynamic fee change according to volume? I thought that was a really good point.
Yeah, actually, that's a great question. It does not change according to volume. So really, it's all about the price action. So you could have tons and tons of volume happening, and if it's a market that has a lot of depth, it's not going to result in a lot of price action. So so it really doesn't have to do with volume. It's more about the price action. So like if the price all of a sudden moves across 30 bins, and so 30 bins you've moved across, that's high volatility, right? So when you move across a lot of bins, that's really what's causing it. So not directly related to volume, it's more related to the price action. So you could have a lot of volume, but not a lot of price action if it's a deep market, if there's a lot of liquidity. Now, if there wasn't a lot of liquidity and you had high volume, then in that case, yes, volume would impact it because you don't have a lot of market depth. And it caused you to move over a lot of bins all in one shot, right? So hopefully that answers that question. That is a very good question. Thanks, Rizab. All right, so DLMM strategies. We talked about the curve strategy, right? That was the example we had before. And the curve strategy, you're going to be using that in stable pools. Stable pool is where both assets have very high correlation, so the price doesn't change a lot relative from one to the other, right? So if we're looking at a USDC, USDT pool, there's not going to be a lot of price action, right? Because USDT and USDC are almost always equal to one, or within a very, very small percentage of one. So curve strategy is ideal for that kind of pool. Spot strategy, I almost always use spot strategy. It's very versatile. Regardless of what the price action is going, you're going to be always earning fees in a spot strategy. And then we have the bid-ask strategy. Typically, bid-ask you may be using to sort of DCAing into or out of an asset. So most of the times when you want to buy something, you may place a limit order, like say using Jupiter or using some kind of order book protocol, like maybe Phoenix. So you would place your bid or you place your ask for a particular price. But the cool thing about DLMM is you can actually use it to DCA into or out of an asset. And so this bid-ask strategy lets you do that. Typically, bid-ask, you're going to be using it one-sided. So like in this example, here we're two-sided, but let's pretend like this teal on the left actually wasn't there. And all we had was the purple USDC here. That would be DCing out of USDC. So as the price goes up, this purple transforms to teal, right? It's going to transform from USDC to USDT, and you're going to DCA out. You're going to be selling your USDC, and you're going to be buying USDT, and you're going to be earning fees all along the way. So that's what's really cool about DLMM and this bid-ask strategy, is that you actually get paid to trade. So it's a really, really cool feature and a really cool strategy to do. So another cool thing is you can stack strategies, right? You don't have to use just one single strategy in a position. You can open a position. Whoops, here we go. Um, so like in this example on the left, we originally opened the position in a spot, right? So you can see we have a flat curve here. Um, but then we did a curve strategy on top of that. So the price shifted, right? So maybe we started in the center here and the price shifted over to the right. And then now we implemented a curve strategy on top of the spot. And then, of course, as price changes, you could do all kinds of crazy stuff. So here's a double dip shark wave strategy. Um, and here this is actually where it used to be curved. Now, if you look at it, these would be more like triangles. But you can get pretty crazy with all the different types of strategies you can stack on one another. And then the other cool thing is you can provide liquidity in different price ranges, right? So this example on the left here, we're providing liquidity in 50 bins. So we're in a price between 147 and 159. And on the right here, we're in a much wider range. So you can see down here we have 435 bins in this position, and the price range is all the way from down from 100 all the way up to 200. So you can set up your strategies to go more narrow or go wider with your positions. And there's a lot of different charts, and these are all linked within the DLMM. There's like Bird Eye, Gecko Terminal. I think there's Deck Screener, Dex Tools. All of these links are within the app, and you can see the assets or the pools in a bunch of different tools, which is great if you want to see like time series charts, see how the price has been trending. All right, so here's a list of different tools, and we'll demonstrate some of these tools today as well as tomorrow. Of course, Jupyter for swapping. Bird Eye is great for providing charts. Gecko Terminal, Deck Screener, all of these also provide charts and other information on the pools. Rug Check, very important, can tell you information about how much overall liquidity there is for a token, what the ownership distribution looks like, how much liquidity is locked, things like that. And they give sort of a risk score, which is good if you're trading meme tokens. And then there's Sonar Watch. Sonar Watch is nice to look at your overall assets. Like if you don't even remember where you had positions open, on what protocols, you can see it all in Sonar Watch, which is a nice way to track your wallet and see where you have your tokens and your assets. All right. So today we're going to be doing something a little bit different, and actually for this entire boot camp today and tomorrow. So normally only those attending the Zoom session can become an LP Army private, right? Graduate from the boot camp. But today, all of you folks out there in Twitter, you guys can participate too. So make sure you take a screenshot of this QR code. And this is going to confirm your participation today. So fill out the form today, put in your email, your Twitter if you have one, your Discord if you have one. If you provide the Discord, we can give you guys the bootcamp, bootcamp trainee Discord role, and we can give that to you. And then if you graduate, you guys can become LP Army privates and become officially enlisted in the Meteora LP Army. All right. So we're gonna get into, yeah, let's do it. Let's go.
That's cool.
Yeah.
Yeah, we need lots of trainees.
Yes. All right. So I'm gonna leave that up here for a second. I'm gonna take a quick break while you guys take that QR code and fill out that form real quick. And so I'll be back in about 5 minutes. All right, I'll be back in just another minute. I'm gonna pull that off, and then we'll get into the demos here in a minute. Rizab and Otto, if you guys wanna chat it, anything, maybe talk about some questions people had while I'm away, please feel free. I'll be right back.
When I have thoughts about the meme coin stimulus discussion yesterday.
All right. Let me get my demo going here. Try to pick the right browser window. All right, let's go to Meteora. All right, we're seeing the Meteora website there.
For folks asking, yeah, I see it. For folks
All right.
asking, I don't think we're going to clip the QR from the recording, so it's going to be out there. But the form will come down. So the form for applying to trainee will come down. So there's an expiration date there,
Right.
and then there will be another expiration for graduating from the boot camp and getting your private role. That
Yep,
one will usually stays up for about a week.
that's right. All right. All right. So let's. We got the Meteora homepage here, and right now by default it displays all of the dynamic pools. And give me a second here. Okay. All right. So we've got all our dynamic pools here. I guess by default it's sorted by deposits. I'm not sure. Maybe it doesn't sort by anything else, kind of like random, or maybe whatever order it comes in from the API. But so here we can see Bonk USDC, Blaze. So these are all different dynamic pools within Meteora. And dynamic pools, those work. Remember, we talked about AMMs versus regular AMMs versus concentrated liquidity market makers. These are standard. Well, it's not really standard. There's some really cool features with dynamic pools as well that sort of differentiate them from typical AMMs. But these are not concentrated liquidity pools. So when you provide the assets into these pools, they go into the pool, and then it's going to provide liquidity across the full range from 0 to infinity. So the first one we're going to start with is LPing into the USDC USDT pool. So if I search here, USDC, here let's look, USDT, USDC. All right, here's the pool that we want. So, and you can see there's a couple of different pools here. I think this Meteora, so this indicates it was a pool created by Meteora. Because it's permissionless, these dynamic pools are permissionless. That means anybody can create a dynamic pool. So you can see people have created a few different dynamic pools here. This is interesting. This one's receiving more yield. But I'm going to go into the official one. So if you guys are following along, you can just filter up here USDT dash USDC. And let's go into the one here that has the little Meteora icon on it. And then we're going to click on that. Okay. And we're going to leave this defaulted to balance deposit. What balance deposit does is whatever two assets you provide, it's going to provide it in the same ratio as it exists in the pool. So in this case, we have about 12% of the pool is sitting in USDC, and about 88% of the pool is sitting in USDT. So that means if we want to open a position in this pool, we have to provide about 88% USDT and about 12% USDC. Okay. Now, we don't have USDC or USDT in this wallet, right? So this wallet has all Solana. So first, what I need to do is I need to swap some Solana for some USDC, and I need to swap some Solana for USDT. So I'm using the backpack wallet app because I can snap it in here. So this was something that Otto had discovered because he was using Backpack in his demo, I think the last time or maybe the time before. It's got a nice little feature here where you can actually snap it into the browser, which is nice when I'm doing demos and when Otto's doing demos because you guys can actually see the wallet app right here in a pane within the browser. So first thing we got to do is I've actually have a little bit less than 0.6 Solana. I've got 0.5978 because transactions that I've been doing for the bootcamp. So the cool thing is there's this Jupyter terminal built right into Meteora down here. So I'm going to click on this little Jupyter terminal. And so by default, it's going to bring up USDC and Solana. So what we need to do is we need to swap Solana for USDC. So we need to flip this around. So I'm going to click this little button here to flip it. So now we have Solana on top. And let's do a small amount here. Let's do like 0.5. No, 0.5. All right, so I'm going to do 0.05 Solana. That's going to give me about $8 worth of USDC. Actually, you know what? Let's do even less than that. Let's do 0.01 because we're going to need to put in a lot more USDT than USDC. So I guess the ratio is almost what, 8 to 2 or 4 to 1. So we'll do 0.01 Sol, and let's click the swap button, confirm. And then you can see over here in our wallet, we have to approve the transaction. So I'm going to click approve. And hopefully everything goes off without a hitch here. I don't know if there's any congestion today. Have you guys been messing around on Solana much today? Has there been congestion? Yes,
No,
please do follow along with what I'm doing here. Sorry, Otto. No congestion today. Okay,
I
looks
haven't
like
seen any. Yeah.
all right. Looks like we got our swap.
Like the side panel though.
Yes,
Nice.
I
You
love this.
retooled.
Yeah, no, this side panel is awesome. So, all right. Yes, you guys, please follow along. Please follow along with me. Do as I do.
Hey, George, I think it'd also be valuable if you talk about what the swap function is inside of here and how
Yeah.
that varies from what we just did.
Oh, within the wallet, you mean?
Correct. How that's
Yeah.
using Jupyter and how the swap tab over here, that's going to put you directly into the pool and not source you the best price.
Oh, I see in here. Yeah.
Yeah.
Yeah. So that's a good point. So, so there is a swap function within all the pools within Meteora. So in the dynamic pools as well as in the DLMMs. So if you click on the swap tab here, you can actually perform swaps directly through the pool that you're in right now. So right now we're in the USDC USDT pool, and we click on this little swap tab. If we wanted to swap our USDC for USDT, we could do that right here. Typically, it's better to do it with Jupyter, because Jupyter will look across all markets and all protocols, and it's going to give you the best price. So the price that you get swapping directly through the pool, it may or may not end up giving you the best price. So like for instance, let's take a look here. And I'm going to flip this. You guys don't have to follow along here with what I'm doing right now. So let's say I want to swap one USDC to USDT. And let's see how Jupyter, so you can see Jupyter is actually routing this through Meteora DLMM, which this is not DLMM, this is dynamic pools. And then it's going to route it through Whirlpool. So it's going to route through 2 hops to get from USDC to USDT. And then if I put the price in here, you know what? Let's put in a big amount here. Let's do like 10,000. That way we get a better comparison of the price. All right, so
those might also be splits, George.
Yeah. So yeah, that's true.
They do.
That's a good point. So yeah, it could be split. So it could end up routing, part of the transaction through Mercurial, maybe part of the transaction through OpenBook. So it may not be actually hopping all along the way here. And you can see it's updating real time, right? So if I do it through Jupyter, I put 10,000 USDC, I end up getting 10,009.41 USDT. If I do it directly through the pool here, you can see I'm getting 1,009.21 USDT. So you can see Jupyter's giving me the best price. So I would recommend always use Jupyter to do your swaps. Don't swap directly through the pool unless there's something specific you're trying to do in that pool, like reset the price and things like that. But that's more of an advanced topic. Maybe Otto might cover it tomorrow. Maybe he won't. I don't know. We'll see. There's a lot of stuff that Otto's going to be covering tomorrow. So, but yeah, if you guys have any questions about any of this stuff, please speak up and ask us in the Discord. All right, so we got our
USDC call out in the beginning session, though. I think Rizop's right, just because it can be confusing for beginners.
Yeah, for sure. All right, so now I do want you guys to follow along here. We're going to put USDT in the bottom here. So if you click on the drop down on the bottom token, we're going to change that to USDT. So just search for USDT here. Should appear right there at the top. You can also confirm the contract address. Here it's ES9V. So make sure you got USDT selected for the bottom, and then we're going to go back to Sol on the top. So you can search for Sol. It'll probably be right up at the top here. So select Sol. So we're going to swap from Sol to USDT. I think our ratio is close to 4-to-1. So I'm going to put 0.04. So I'll give you about 6 right now at today's price at this moment in time. 0.04 Solana is going to give you about 6.68 USDT. All right. Then we're going to click swap. Oh, you know what? I'm going to change the slippage. I just noticed slippage is 1%. I think the default slippage within this little Jupyter panel is 0.03. I think everything else you guys can leave at default. Everyone seems to think that Solana's behaving today. It's been fast, so you can leave everything defaulted there. All right, let's click swap, confirm. And then in our wallet application, we're going to approve the transaction. And hopefully we don't have any issues with the Jupyter terminal.
I think they shipped some upgrades. It's been working really well lately.
Great. Awesome. Yep, looks like that one worked too. So we're going to close this out. We'll collapse our terminal here. In our handy dandy browser pane here with our wallet, backpack wallet, we can see now we have USDT and we have USDC. So now we're ready to provide a deposit into this pool. All right, so let's try this. Let's click on max on USDT. So what's going to happen when we click this max button down here on USDT? It's going to automatically fill in the amount of USDC that's going to correspond to that max. So let's click max here. And because we have a balanced deposit, we're going to put in 0.92, in my case, 0.925,194 USDC. So it looks like my head math was way off because I miscalculated the ratio. So you can see for our amount of USDT, we're going to put in, I guess it's almost 8 to 1 or 7 to 1, I don't know. Anyway, for 6.68, we're going to put in almost 1 USDC. And then we're going to click the deposit button. We're going to click approve. And then hopefully we get our liquidity deposited here in a minute. And there we go. We have our position open. If we look up here at the top, we can see we've got a total deposit, 7.6. Of course, your amount of deposit is going to be slightly different. And we can see in our wallet now we have a Meteora liquidity provider token. So in the dynamic pools, when you create a position in a dynamic pool, you actually get a LP token for that particular pool. So we have 6.9151 LP tokens for this pool. So don't ever burn that token. Don't ever burn any LP tokens you have. If you do, you're going to lose everything you have. So we have this LP token, and that represents our position in this pool. Okay. Couple other things. I didn't show you guys this option here. So if you click this button, you can set the slippage, and I think this is the slippage for swaps. And then here you can set priority fee. I guess I have mine set to high. I'm going to set it to normal. I think normal priority fee right now is okay. There's not a lot of congestion on the Solana network. And then I'm going to save that setting. There's also some settings up here. If you click this little gear icon up at the top, and this is to select your RPC. So this is how all of our transactions are going to be submitted. I'm actually going to change it to the Triton RPC Pool 1. So basically, this is how your transactions are getting to the blockchain, this RPC, remote procedure call URL, and this is how all of your transactions get submitted to the blockchain, is through this RPC. You may have a custom RPC, so you would just select custom and put your custom RPC URL there. I'm just going to use a standard RPC. All right, so that is our USDC USDT dynamic pool. And we got a question here. Can you talk to the burn tab and how we probably shouldn't use it? Yes, actually I will. That's a good question. So this burn tab, this is basically if you are a token creator, you've created your own meme token, let's say, that is why you would want to use this burn token. So this is really for token teams, as it says here. So what happens is, say we go to rug check. I'm going to open up a new tab here with rug check. And let's see, let's look at whatever tokens they've got here right now. And there's all kinds of meme tokens here all the time, right? So let's look at this sober token, Soul Labrador. So let's say this was my token and I created it. So you can see here we've actually got 0% locked. So that means that right now the liquidity isn't locked. This 5,000 in liquidity can get pulled out at any point in time, and then there's no liquidity in the market. Nobody can trade it. So that's not a good thing, and that results in this sort of this danger analysis that RugCheck is giving us. So as an LP token provider, what I could do is I could take that liquidity, and instead of having it in Radium, I could put it in Meteora, right? So we could create a new market for our Sol Labrador, create it in Meteora, and then once we have our LP token, right? Once we've provided that liquidity in that new market, we can burn it. And what happens is when we burn it, it's going to lock that liquidity. But it's going to allow us to claim fees on that liquidity. And this is a great new feature that Meteora has. You can't do this in Radium. In Radium, if you burn that LP token, you're never going to get access to those fees. You're never going to get access to the liquidity. But if you burn the LP token on Meteora, you can actually claim those fees forever, which is an amazing feature. Because if Sol Labrador, our token, right, our theoretical token that we created, if this token sees tons and tons of volume, then through the Meteora market liquidity that we set up, and that liquidity token that we locked, we can still claim the fees on that. So if it's got tons and tons of volume, it's going to be generating tons and tons of fees in this market. So that's what that burn and lock feature is, right? It's really intended for people who are creating tokens and they want to lock their liquidity. So that was a very good question. So you would never want to do this in USDC, USDT, because it's not your token. You burn and lock that liquidity. If I were to burn and lock this, roughly $7, or actually, yeah, $7.60 worth of liquidity, I'll never get access to it again. I'll get the fees, which are going to be kind of small, because fees tend to be pretty small in these stable pools, and I'll never get that liquidity again. So don't use this feature unless you're a token creator, you're creating your own meme tokens, and you're providing liquidity on Meteora. That was a good question. All right, so now let's go to DLMM. So I'm going to go scroll up to the top here. I'm going to click on DLMM. All right, so now we're looking at all the DLMM pools. And these are dynamic liquidity market maker pools. This is the DLMM product that Meteora has that we talked about before. And I'm going to search again. Let's look for, again, USDT, USDC. And you can see we've got 20 pools. Actually, I flipped that, but it doesn't really matter. You can do it either way. That's the cool thing about that search. All right, we're going to expand it. So now we see there's a lot of different markets here, right? And remember the parameters we talked about, the bin step and the fee. We can see that as well. And so we've got a lot of different markets here with different bin steps, different fees. I'm going to go into the top one that has the most total value locked, and also happens to have the most 24-hour volume, which is this USDC-USDT one bin step 0.01% fee pool. So I want you guys to follow along here. Search for USDC, USDT, or USDT, USDC. The order doesn't matter. You don't have to put in the dash either. You can put a space if you want. And then we're going to go into this one. By default, we're sorting by 24-hour volume, so that should give you this same one. If you're sorting different, if you're sorting by deposits or by 24-hour fee, just click on the 24-hour column. And so the little red arrow is pointing down. And let's pick the first pool there. All right. Now we're ready to add liquidity into our pool here. Oh, you know what? We don't have any USDT now. So that's okay. We can swap. Let's do that. So click down here. So you should still have some USDC left over from, because when we provided liquidity, it was all USDT and then some portion of USDC. So if you want, let's click the Jupyter terminal, or not if you want, do it. Let's go and let's do 0.01 SOL for our amount. And then, so make sure you have SOL at the top, SOL selected. And we want 0.01 SOL. And then on the bottom, make sure you have USDT selected. So you can, again, search for USDT if you don't have it selected, but you should have it selected if you've been following along. Select USDT. And we can see for our 0.01 SOL, I don't know why we're not getting a price here. Let's type it again. Okay. We're going to get 1.67 USDT. All right, so let's go ahead and execute that swap, confirm, approve. And then we'll have some USDT to put into the dynamic pool, I'm sorry, the DLMM pool. And while we're doing that, got a couple of questions here. Yes, someone's recommending to show how to do one-sided liquidity. A lot of users ask that on Discord. That's a good one. We'll do that one here in a moment. In fact, I'll do a one-sided position when we go into the USDC SOL pool here in a minute. All right, so now we have our USDT. Now we're ready to open our position. So let's click this Add Liquidity button down here. And then, so there's a couple of ways you can do this. You can do autofill, or you can just deposit your totals. We'll do a little flexibility there. If you guys want to autofill, you can autofill. If not, that's fine. You can do that. You can do it without autofill. Remember when we talked about curve strategy is ideal for highly correlated pairs, right? So USDC, USDT tend to trade about the same price most of the time. So I'm going to go with the curve strategy. I'm going to leave autofill, and then I'm just going to hit max. Now, if you don't have autofill selected, I'm going to zero this out. What happens is, say if I do max here, it's only going to put in the USDT amount. And then if I click max here, then it puts in the USDC amount, right? And you can see they're not equal amounts, right? Because I have lesser value of USDC than I do USDT. But that's okay. You can do that too. So this is what you would do for a one-sided position, right? You would have 0. You would disable autofill, go 0, and then enter the amount of the side that you want, right? So if we want to only put in USDT, we can do that here. So I guess that actually already answers the question about one-sided. So we'll mark that one as answered. All right, so I'm gonna go ahead and autofill. I'm gonna go in with the max USDC, and I'm gonna go ahead and add liquidity. And then we got our position coming up here, hopefully in a minute. Another question we've got, unsure if this is too advanced or what, but can the reason why DLMM does not provide any LP token or NFT, what can be the reason why they don't provide an LP token? People get confused sometimes why it's not. It's really just because of the way that they implemented the DLMM protocol. It is a bit more advanced compared to other protocols. So it's really just the way they implemented it. I know they've had some discussions about potentially at some point creating an LP token for it, but I don't know that any decisions have been made or if it's going to be possible anytime soon.
Hey, George.
Yeah.
Do you mind dropping down this like arrow? So on
Yeah.
the DLMM, you can actually go down and see your percent liquidity in each bit, like little bin. So I believe this is kind of why there's not like the LP token, is because your position's already kind of established and your percent of fees is kind of fixed, but the LP token is like more of like how you're gonna get your piece of the pie from the overall pool.
Right. Yep. So you can see here we've got a tiny fraction in each one of these bins because this is a huge pool, right? I mean, we've got $3.5 million of liquidity in total, and I put in $1, $1.50. So, yep. Oh, yeah, and you know what, Rizab, Well, here I'll show it when we do the USDC Sol, which is the next one that we're gonna demo. Because I did forget to show the fees. All right. So let's see. Somebody else asked, would it be great if we can shift liquidity from one pool to another using MLP tokens? Yes, that would be great, but we cannot do that. You have to manually shift any assets you want to do by removing liquidity, doing any swaps that may be necessary, and then adding liquidity back in. All right. Now, let's go back to DLMM. So you can click on DLMM back up here at the top. There was also like a little back arrow you could click to get to it. I'm going to clear out the search. And now I'm going to search for Sol USDC. All right. And you know what? We'll do a one-sided position here. This will be a nice little demo for the one-sided position. All right, so I've got a bunch of Sol USDC pools here. I'm going to sort by 24-hour volume, descending. And so that gives us the 5 bin step 0.01% fee pool. So let's go into that one. 5 bin step 0.01% fee. All right. Now we're going to do a one-sided position. So one-sided position means we're going to put in only one of the two assets. And I'm going to do it with Sol because I know all of you should have some Sol ready to provide liquidity. So let's add our liquidity. I'm going to uncheck the autofill. And let's just do a small amount again. Let's do 0.01 Sol. So now you can see we've got all teal, right? No purple. And we're going to only provide Sol liquidity in this position. Okay. Now down here, you'll notice there's this little expansion arrow here, show price info. I'm going to click that. And remember the costs we talked about, right? So it's going to cost us 0.056 something Sol to open this position. You can see that amount right here. You can see it's not going to cost us any bin arrays, right? We don't have to open any new bin arrays because we're providing liquidity in a range where people have already provided liquidity. So like, for example, let's say if I let's change the range here. I'm going to do a crazy range. Let's do like 1,000, 10,000. All right. Nobody's ever provided liquidity in this range before, right? So if I put in $1 here and then I expand the price info, now you can see it's going to cost me 2 bin arrays, right? I'm going to have to pay 0.141 Sol. That's non-refundable. I'm never going to get that back because I'm providing liquidity in a range where nobody's ever provided liquidity before, right? So I'm creating these new bin arrays that are necessary to provide liquidity in this range. Okay. So just wanted to demonstrate what happens when you have to pay for new bins that haven't been created before. So I'm going to click reset price. Let's get back to the current price. And I'm going to zero this USDC out. And this reset price feature is nice. Like if the price is ever shifting on you, you want to recenter the 69 bins, which it just did now. I'm going to reset price. Now we're recentered. All right, let's put in 0.01 Sol. And I heard a little pop. Did somebody raise their hand? I guess I lowered it. All right. So, hold on a second. I want to go through for the full range. So here, I'm going to reset price again. Where autofill is off, we're going to do 0.010 Sol. So your position should look very similar to this. You've got a bunch of bins to the left in teal, no bins to the right in purple. And then we're going to add liquidity. And then we're going to confirm our transaction. And then we should have an open position in just a moment. There we go. It does take the UI a moment to update sometimes. All right, so now we have our position here. We expand this. We can kind of see some of the details. So we have 0.03. Well, see, it's changing all the time, right? Because the price is moving all the time, right? So this is cool. And you can see I love this, and the Meteora UI is phenomenal here. Let me zoom out a little bit so you can see it. So we can see the price right now is this is a reversed market. I just realized. So normally the price is like this, right? USDC over Sol, right? This market, they decided to be cute and flip USDC and Sol. So Sol is the larger asset. It's the quote in this particular market. It's the quote asset. Typically, you want USDC to be your quote asset, not Sol. So that's why the price is kind of screwy here. And so this it's kind of reversed, right? Let me do this. Let me go back to DLMM. You guys can follow along if you want or not. It doesn't matter. So typically we have Sol as the base asset and USDC as the quote asset. So I'm going to go into this pool so you can see what the price is normally. I should have been paying closer attention. Apologize for that. All right. So now we see Sol USDC, and we see a price of 167 USDC per Sol. I'll open up a little position here too. If you guys want to follow along, feel free. I'm going to do the same thing, 0.01 Sol. And I'm going to expand this again. You can see we're not paying for new bins because we're providing liquidity where people have provided liquidity before. I'm going to add liquidity. I'm going to confirm. And here we go. And you can see as the price changes, so the price is moving up, I'm going to end up having less Sol than I started with, but more USDC. So you can see right now I've got about 9.5 cents of USDC. Now I have 8.8 cents because the price moved down. So this is really cool. I love this feature in Meteora where you can just see the price action, see what's happening to your assets as the price moves. You can see how much you're earning in fees as the price is moving. So you can see we're got a tiny bit of USDC in fees, tiny bit of Sol in fees. And if we go back to our other position, let's see. Which one was it? This one. We can see we've got, a little bit more fees maybe. Let's see if we're still in range. Yep, we're still in range. So when you go out of range, right? So if the price moves, let's go back to the other pool. Sorry, I'm all over the place here. So as long as the price of Sol is going to be at 167.02 or higher, all the way up to 168.16, I'll be earning fees. So as long as I'm in that range, I'm earning fees. What happens is if the price moves down to the next bin, which looks like it's 166.99, then I will no longer be earning fees, right? Even though my position has all of these bins in it, it doesn't have any liquidity in it, right? There's no teal in these bins out here. So if the price moves down below 167, I'm not going to be earning fees. So what do you do if that happens, right? So let's say we go out of range. The nice thing is there's a couple of things you can do. So you can withdraw 100%, you can close the position and then just create a new position. That's not typically what I like to do. What I like to do is rebalance with the existing position. So let's say we want to put more USDC down here, right? So we want to, maybe we're getting too close to the edge and we're like, you know what, if the price drops, I'm not going to be earning any fees. So I'm going to provide more USDC. So we could do it a couple of different ways. We could add more USDC to this position. Or what I like to do is I like to use the capital that I've already got in the position. So just redistribute it, right? So let's take half of it out. So I'm going to withdraw liquidity This is going to pull out half of the USDC, half of the SOL that I have in this position. I'm going to approve. Now the shape of the liquidity or the distribution of the liquidity is not going to change, right? It's only the total amount that has been reduced because I pulled out half of the liquidity. And then what I want to do is I want to add it back in. So I'm going to go ahead and leave autofill on. So I'm going to add in back all the USDC I just pulled, right? I just pulled out about 4 cents. And now you can see it's going to spread that liquidity over all these bins, right? So that it's kind of a small amount relative to my total because I didn't have a lot of USDC in there. Now, if the price had shifted up quite a bit, right? And then I had a lot more teal and then I pulled out all that teal or I pulled out all that USDC and then put it back in, then when I put it back in, these teal bars would have been higher, right? I would have had more USDC relative to the overall position. So I'm going to add that liquidity in. I'm going to confirm my transaction. And then you can see there's also a little bit of purple up here. A little bit of extra sort of, lighter purple. All right, so now I've got USDC down here. Not a lot, but there is USDC down here. So now if the price goes down below 167, I will be earning fees. Not a lot because it's not a lot of liquidity, but I will be earning fees. So that's just kind of an example how you can sort of reshape your position as the price shifts. So actually, even with the late start, I think we managed to cover everything. I'm gonna go back to the deck here. Real quick, any questions? Or actually, we do have a question in chat here. Let me read this. So Jupiter uses Meteora pools to determine the best price along with other pools. Yes, that's correct. So let's do this. I'm going to open up a Jupiter tab here. And let's just say we've got SOL. We want to swap 0.1 SOL for USDC. So what Jupiter is doing at this moment in time, it's looking at all protocols, all pools and all protocols, and not just SOL USDC pools. It could be looking at bonk pools. It could be looking at, Jupiter pools, like anything, any pool with any token. It's going to look at across all of them, and it's going to route the best price through all of them. So the really cool thing about the Jupiter UI is if we click on this, we get a really nice visual of how it's going to route that order. Hang on, let me zoom here. So we can see, well, right now it just changed. Oh man, that sucks because it was kind of cool because it was going to go through some different stuff. Let's refresh. Let's click this. All right, so you can see we're going to swap SOL for WIF through the Meteora DLMM, and then we're going to swap WIF for USDC through Radium to get from SOL to USDC. And then we refresh it again, we're going to get a different path, right? Now we're going to go through Pith. We're going to swap SOL for Pith through Meteora, a Meteora DLMM pool. And then we're going to swap Pith for USDC through the Phoenix pool, a Pith USDC Phoenix pool. So that's the cool thing about Jupiter and how Jupiter works with the routing. So now we're just going to go straight through Cropper, one market. We're going to swap SOL for USDC. That's the current price right now at this very moment in time. So that's a really cool thing about how Jupiter works. Let's see. So somebody asks, are you going to pay 0.06 SOL for the additional position you created? I don't think I did. I think it was, well, let's see actually, because I had autofill on. So it wasn't going, oh, you're talking about the fee. Yeah, so that's another cool thing about these positions. And actually, that's a good question. So because I already have this existing position, and this is kind of a little bit of a bug in the UI. The UI does say that I'm going to pay 0.56 SOL. That is actually not the case. When you have an open position and you're adding additional liquidity to it, you do not have to pay that refundable fee again, okay? Because that position's already open, it's already been created, and you've already paid the rent for that position. So if you're adding to that position, you're not going to pay an additional 0.06 SOL for the fee. So that was actually a really good question, and I'm glad you brought that one up. Somebody's asking, could you tell why you chose a particular SOL USDC pool? Say one with a 2 bin. Okay, that is another good question. So in this particular case, the only reason I selected that pool was because it didn't have SOL and USDC reversed like this one, right? I wanted USDC to be the second token. Typically, that's called the quote token. And then the other token is the base token. So the quote token is kind of what everything is going to be priced in, right? So if your quote token is USDC, everything is going to make sense. The price is going to make sense. So and that's really the only reason why I chose this pool, the 2 bin step and then 0.02% fee pool, because see, our quote makes sense, right? This is the price that we're used to. We're used to USD or USDC being our quote token. So that's kind of what we're familiar with. The one I went into originally, it has that reversed, which, can be confusing to people, right? So if I go to this one where we have USDC dash SOL, where it's reversed, which is the first one I accidentally went into, it has this confusing price, right? This 0.00599 price of SOL per USDC, and that doesn't make sense, right? We're not really familiar with that price. The nice thing is you can click the reverse here, but it only reverses it up here. It doesn't reverse it down here. So you're still kind of dealing with this unfamiliar price range. So that's really the only reason why I went back to that other pool. But other reasons you may go into different fee pools. It all really depends on your strategy. So this is actually a good opportunity to talk about that. So it really depends on how active you're going to be in managing the position. So say you want to be in chill out mode, right? You don't want to be dealing with adjusting your position all the time. In that case, you're going to want to go into a higher bin step, because what happens is, let's look at this 16 bin step, 0.03% fee pool. So if we go in here into this pool, you can see the 69 bin default is going to cover a much larger range of prices, right? That's going to take us all the way down to 158 and all the way up to 176. So if we provide liquidity in this pool, we'll have a nice wide range of values, right? So even if the price goes all the way down to 160, 159, we're still in range. We don't really have to do anything to adjust the position because we're still going to be earning fees. If we go back to the positions that we opened, which were lower bin step, and so like this 2 bin step, let's take a look to see what's happening there. So you can see where kind of where our main liquidity is, we're already out our range. So if you're in a lower bin step pool, you're going to need to be, you may potentially, excuse me, hold on. You may potentially need to be more active in managing that liquidity. So here, I'm going to do another rebalance here, right? So you can see now we have less SOL here, like in these little bins here. So I'm going to do a withdrawal again, 50%. And that's going to withdraw about 0.005 SOL. And then I'm going to add it back in. And I'll just do it autofill. If I do an autofill with the USDC, it should automatically, no, I didn't put in 0.005. So you know what? Let's not do autofill. I'll just manually put the 0.005. And we'll go ahead and put in all the rest of our USDC as well. So now you can see those bins that were mostly empty. Once we add this liquidity back in, it's going to fill in those little bins there. So we can see, since the prices kind of moved down and we were out of range, I had to actively manage that, right? Because I'm in a lower bin step pool. So the nice thing with lower bin step pools, because there's a lot more price action, you're going to earn more in fees, but you also have to be on top of it because you can easily go out of range. If you go to a higher bin step pool, like the 16 bin step pool, um, you're gonna be providing liquidity in a wider range per bin and a wider range in total. So you won't have to be on top of it as much. But the flip side is that you may not earn as much in fees either. Okay. Um, Otto, Rizop, anything else you guys can think to add or discuss? Any other questions you guys saw that might be interesting to address?
Good work, man. That was great. Way to recover from that tech difficulty earlier. Sometimes that's hard.
Yeah, thanks, man.
Yeah, yeah. You hit the
Hopefully,
ground with your feet running. It was great.
all right, awesome. Rizop, anything?
No, nothing out of me. Um, I think maybe Otto, I think an idea was if you would touch like the DLMM, like the limitation of there being the 69 bin and that the team's working on getting around that, I think that would be really useful in like info and how like the bin step is different from like the bin. So
Yeah, that's a good point.
Yeah,
So here,
usually I think we got sidetracked a couple of times. Usually Geek Lad hits that stuff. I'll think about it. Yeah.
okay.
okay, no worries. I can also jump in and
Oh,
explain
and
that
you
tomorrow.
mentioned the Dune dashboard, Geeklet, sorry.
Yeah. Here, you know what? Okay, I can pop
Maybe
it
you
up
can
here real
maybe
quick.
you can text me offline or
Yeah,
something about that.
I can even
Oh,
pull it
this
up.
one you were talking about.
Yeah, so I was
Okay.
talking
Yeah,
about
yeah,
this
yeah.
one. And so the nice thing about this, because somebody was asking about the real time, can we get more real time view of fee per TVL? The challenge about doing that real time is that fees are more of a cumulative action, right? So your fees, are have to be over a certain period of time, and then your total value locked is kind of like what it is at a current point in time. So it's really hard to get a real-time view on this. So that's why I created this dashboard. So this is the USDC sole USDC pool, one bin step, 0.01% fee. This hasn't been refreshed for several days, but you can see over time what the fee over TVL has been. And unfortunately, this I probably should add more decimals here, but you know, you can kind of see how it has trended. This is probably more useful for like meme pairs and stuff. But yeah, Otto, if you can maybe pull up a meme pair and pull up this report for a meme pair tomorrow and kind of demonstrate that to the folks, I think that would be really cool. All right. Let's see. Somebody's asking, do you have a Dune or data about the top 1% users and how much fees they have? Yeah, no, I don't, unfortunately. Um, it's a lot of data to do. You'd have to look at it. You can really only do this over a certain period of time. So it would have to be sort of the top users over a narrow period of time, maybe the past 24 hours. Maybe I can see if I can do something like that. Um, yeah, it would be interesting to look at. But yeah, if you guys have any ideas for different reports you would like to see, different analysis, um, that's what I do for a living. So, and I can jump into Dune. Dune's a great platform for doing stuff like that. If there's any of you out there that know SQL, um, I recommend you get into Dune and start looking at the data. That you can do lots of really cool analysis and reports, and we would love to see that in the community, in the Meteora community. Right now, I know there's a couple of other folks that have created some Dune reports that are pretty useful. So if you know SQL, highly recommend you get on to Dune and start looking at the data they have available there and start developing some reports and share it with the community. I've developed some reports. I've developed my Meteora bot, and that's on the Discord. Also created a Google Sheet that can help find DLMM opportunities. Otto will cover some of that stuff tomorrow. So, all right. Anybody have anything else to add?
Thanks, y'all.
All right, guys. We'll see you tomorrow.
Thank you, everybody. Have a
Have a
nice
good one.
day.
All right, you too. Bye.